Hi everyone, welcome to our CalHFA Dream for All class to discuss a little bit about the 2026 rollout of the Dream for All program. So we get a lot of questions about what to expect in this upcoming rollout for 2026. So we thought we'd put together an interactive live session on YouTube for you to help you better understand and be prepared for what's to come in 2026. This is the third session or rollout of Dream for All. We were a part of the creation of the program back a few years ago. That was iteration one. In 2024, we had the second rollout, which was lottery based. And then this year, going into 2026, it will also be lottery based. So as you're hearing about this class, you're realizing that the lottery is going to take place again sometime in 2026. So our goal this evening is to help you kind of understand a little bit more about what we've learned in helping over 150 families with the California Dream for All program and being the leading provider of CalHFA products in the state. So as an expert in this program, I want to kind of impart with you just a little bit of what I've learned and how I can best help support you if you decide to take advantage of this fantastic resource in the Dream for All program. Now, tonight is a live session, so if you do have questions, you can use the chat feature on YouTube. I'll be monitoring the window, so if I do get some questions that come in, we'll go ahead and answer those on air. I do have some slides prepared for our discussion this evening, but I will weave in some of those questions that you ask on the chat, and then we'll kind of carve out some time later on in our discussion to review any other questions you might have as a group. Well, just to give you a little bit of a sense of who we are, I work for an organization called American Pacific Mortgage. We are the #1 CalHFA lender in the state. I specialize in first-time homebuyer programs, so that's what we do as our team is here. And we really pride ourselves in serving our community and homeownership through homebuyer education classes. If you'd like to learn a little bit more about some of our interactive classes that we provide all across the country, you can visit mortgageeducate.com. Our organization is based here in Sacramento, and we teach classes right here, but we also serve our community through virtual sessions that we do to help design home buying options like the CalHFA Dream for All program. Well, let's talk a little bit about the Dream for All program. There's a lot of excitement about it. We've helped, like I said, over 150 families achieve the dream of homeownership with the Dream for All program. So let's talk a little bit about what it means to utilize this program. This program is a shared appreciation program. It essentially provides up to 20% of your purchase price in assistance or $150,000, whichever is less. Now, these assistance funds can be used for either down payment or closing costs. Most clients that utilize this program are going to use the voucher for the full 20%, and then they'll utilize closing costs as an out-of-pocket expense. But there are ways that we can engineer the program to take a portion of the voucher to cover closing costs, so you can essentially create a situation where there's limited funds out of pocket. We'll talk more about the mechanics of that in just a bit. Now, the CalHFA Dream for All program is not a forgivable program, okay? What happens is the trigger of the repayment of the shared appreciation loan is paid back when you either sell the home or if you refinance the property at any time. However, with CalHFA Dream for All, you do have a one-time refinance option, but you do need to participate in a CalHFA refinance loan and have made at least 12 payments on the CalHFA Dream for All product. I do have a segment in tonight's class that will talk specifically about accessing a refinance if you do have the Dream for All program. Now, this program is 20% of your sales price or $150,000, whichever is less. In your repayment of the shared appreciation upon sale or the second refinance, then you would pay back the shared appreciation loan that you received from CalHFA along with 20% of the appreciation in the home. So depending on what I've purchased the home at versus what I've sold, or at the time of refinance what the appraised value is, I would pay back an additional 20% on top of what I borrowed with the shared appreciation loan. Now, if I'm considered a low-income housing buyer, which basically means if my income is below 80%, then my shared appreciation return on the program is 15%. And last thing I just want to touch here, we don't have an exact launch date of Dream for All, but again, our class tonight is just to help prepare you. From our guidance from CalHFA, we're expecting a rollout or the opening of the lottery portal sometime in early 2026. All right, let's talk a little bit about the guidelines for Dream for All and who is eligible to participate in this program. First of all borrowers must be first-time home buyers. And so that means you have not owned a home in the last 3 years as your primary residence. In addition to Dream for All, one of the borrowers involved in the program has to be a first-generational buyer. Now, what is a first-generational home buyer? A first-generational home buyer is someone's parents that have not owned a home in the last 7 years in the United States, or at the time of passing, they did not own a home, or if that person that's borrowing as a first-generational buyer was under foster care at any time, they would also be considered a first-generational buyer. Now, that's a big requirement. So again, let me just repeat that. One of the borrowers involved in the voucher must be a first-generational buyer. So if we have 2 applicants together, one qualifies with the first-time buyer program, the other one has to be a first-generational buyer. Again, that means their parents have not owned a home as their primary residence in the United States in the last 7 years or at the time of passing, or that borrower could have been under foster care at some point, and then they would be considered a first-generational buyer. Now, from a credit score perspective, the minimum credit score for Dream for All for a low-income housing buyer is 660. So that means if I make less than 80% of the median income, minimum credit score is 660. If I'm what we consider as moderate income, it's 680 and above to qualify on Dream for All. Now, Dream for All is a conventional home loan product. Under the entire umbrella of CalHFA loans, there are a variety of different programs: FHA loans, VA, USDA, and then conventional loans. However, the Dream for All program only matches up with the conventional loan product, which is a Fannie Mae loan. Not a Freddie Mac loan, it's a Fannie Mae home loan. Now, there's a thing that we utilize in measuring qualifying called debt to income ratio, or DTI. The max debt to income ratio is 45% for those that have a 680 credit score to 700, or 699, I should say. If you're 700 credit score and above, we can go up to a 50% debt to income ratio. Now, the Dream for All program has its own set of income limits that you can find on the CalHFA website, and I've highlighted a few markets here on screen. Now, this is limits that will change annually. They'll actually be updated sometime in June of 26. But these are the guidelines for income that we had rolled out in June of 2025. They are slightly lower than some of the other products that we offer with CalHFA. So Dream for All does have its own specific income limits. And you can see Sacramento's at 191. We go down to LA at 168. And our Bay Area markets have some of the highest income limits. Income limits on CalHFA programs, including Dream for All, are a little bit different than other products that are first-time buyer options, because we only look at the income of the applicants, not the entire household income. So when we design some of these options, we can kind of figure out what the best way is to position a client's product, because we only are looking at the applicant's income. For example, if I'm gonna apply just in my name and I make, let's say, $150,000 annual income, and that is within the Sacramento County income limits, but I have a spouse that makes $100,000 per year, combined we would actually exceed the income limits for the program. However, if I'm gonna only apply on the loan, then my income is only factored in. Now, one of the unique things with CalHFA, which is important, is that if I have a dual income situation, so I do have a spouse or partner that's contributing to my household, but if I'm the only one that's applying on the loan, my name is the only one that will be on the loan agreement, but also on the deed to the house. So that's a really important element with CalHFA. So, you know, there is kind of a trade-off here. If you're not going to include a partner's income and they're not going to be a part of the application because you're trying to stay within the income limits, then at the same time, that person's not going to be able to participate in the ownership of the home. All right. Now, I know we have some people joining us a little bit late as we got launched at 6 o'clock. I want to just remind everyone, this is a live class, so if you have questions, just drop those in the chat. I'm monitoring the activity there. I'll answer some of your questions live on air. And of course, we're going to spend some time a little bit later in tonight's class opening up to the rest of the audience. Let's talk a little bit about the mechanics of Dream for All and how we kind of apply the voucher funds. And we've given just a kind of really simple example, kind of two different lanes, if you will. One is taking the entire voucher and using it towards an entire 20% down payment. The other one is partitioning off a portion of the Dream for All voucher and using some of it towards closing costs. So really simple exercise we're going to walk through. If we had someone that, let's say, purchased at $500,000, That means their voucher that they would receive in eligibility from the Dream for All program would be 20% of that $500,000 or $100,000. If they chose to contribute that entire to the down payment, that would allow them to put 20% down, eliminate mortgage insurance. However, they would have closing costs and prepaid items out of pocket. Now, generally, we recommend first-time buyers to estimate about 2 to 3% of their purchase price for those expected expenses. Okay. Now, in that scenario, based upon today's market, that mortgage payment would basically be approximately about $31.25 a month, including principal and interest, property taxes, insurance, all inclusive in that payment would be that $31.25. Okay. So that's one lane that a first-time buyer can go down. Now, if I'm limited on resources to put down for closing costs, then I can, again, section off some of the voucher to be used to go towards those closing costs. For example, I have that same $500,000 purchase price. I take that $100,000 voucher, $85,000 of that can be used towards the down payment. And then I take $15,000 in credit towards my closing costs and my prepaid items. Now, the trade-off to that is I'm now going to put myself into a mortgage insurance situation. So there will be a cost trade-off there. And now my payment rises because I still have my principal and interest, which also will increase because I'm borrowing more. My taxes will remain the same, insurance remains the same, but then I also add on mortgage insurance. So in my example here, now my mortgage payment lifts up by about $175 a month. And that might be worth the trade-off for some of our first-time buyers that just don't have the resources for down payment and closing costs. One thing I want to mention too, which is kind of a misconception on this program, many clients that first get the voucher think, now that I got the voucher, I can buy a home with nothing out of pocket and no contribution financially. And it can ultimately work out that way at the end of the day when we close escrow. However, anytime someone buys a home, whether you're using Dream for All or any other product that's available to you, you do have to make an earnest money deposit in California to secure a property. Usually an earnest money deposit is 1 to 2% of that purchase price. It counts towards your total out-of-pocket expense, but ultimately you are going to have some type of contribution. So the question I get often is, hey, Jason, I got selected for the voucher. I'm going to use some of my $100,000 to put towards my deposit on the house. And unfortunately, we can't do that. You're going to have to make a contribution up front. That earnest money deposit is usually contributed to an escrow company within 1 to 3 days of the accepted offer. Because when we fund the Dream for All program, we actually fund it at the close of escrow. So whenever we close on the home, that's when we fund the first mortgage as well as the Dream for All voucher. All right. Now, I did get a question that came in. Can we get pre-approved now, even though the registration doesn't start until 2026? So absolutely. So a lot of our clients are already getting pre-approved for the program. The guidelines have already been out for the program. So we would encourage you to get qualified now. It doesn't change your chances of winning the lottery whenever the rollout happens. But ultimately, yeah, you can get pre-approved right away. The announcement was made last month, so we are seeing a lot more folks in our community reaching out to us to get pre-approved and get all situated. I think it's also a great opportunity to start having the conversation around pre-approval now, because if there's things that we can do to help coach you to qualifying, then we want to have those conversations now before it's too late, right? Especially if the lottery opens up in early 26. And maybe there's some credit conversations we can have, or maybe some student loan payment reorganization conversations we need to have. Let's have those conversations now versus waiting till January, for example, and maybe the program has opened up by then. Okay. You'll find more details about how to start the process with us. And I'm going to give you kind of a step-by-step on what's required to enter the lottery when that happens. Before we get there, though, I want to talk a little bit about the shared appreciation, because I think people need to understand that do want to participate in the program. It is not free money. It is money that is repaid upon sell or refinance, but it also does come with it a shared appreciation component. Without question, this program provides better affordability for Californians all across the state and really makes homeownership an achievable dream, right? And so those that have gotten to obtain a voucher have really had a huge privilege to be able to access homeownership and make it more affordable than it otherwise would have been with lesser down payments. But let's talk a little bit about the shared appreciation and kind of what it looks like. And this is an example you can also find on the CalHFA website. So all the material that we have right now is basically stuff that we've reviewed and trained on with the CalHFA program. But if we looked at an example where someone, let's say, bought a home for $500,000, right? So day one, we bought the house for $500,000. We financed 400,000 or 80% of the value of the home for a mortgage, and we got a voucher for $100,000. That would be what we would look like when we closed escrow, right? When we bought our house, we took possession of our home. Now let's fast forward 5 years later. Let's see how home appreciation and Dream for All shared appreciation, that relationship, what that looks like. So if my home now goes from $500,000 when I bought it all the way up to $640,000, now my home has appreciated $140,000, right? Which is great news. Now let's say I go to sell that home, right? Well, I go to sell that home. Now my balance, let's say, has projected to drop on my first mortgage from $400,000 down to $370,000. So I've paid back some of my principal of my loan. Now, upon the sale of my home, I'm going to pay back my original voucher of $100,000, plus based upon my home going up in value from $500,000 to $640,000, my shared appreciation component is $28,000. So you take your shared appreciation component, which would be the $28,000, plus what I have in the voucher, that's what would be repaid upon sale of my home. Now, if I go to sell my home for $640,000, I'm also still walking away with equity in my home on top after I paid back. So the goal is when we sell our home to be able to clear our shared appreciation loan, clear the appreciation requirement and payback, but also walk away with home equity. So maybe this is a building block opportunity for me to buy my next home and now leverage the equity that I've achieved in my home. So as a buyer, I can walk away with additional funds to that next purchase. And you can see, as I think about my home equity, right? I pay down my mortgage over the course of those 5 years, $30,000. My home is appreciated by $112,000. All of those things have been achieved by having that baseline start with the Dream for All program. Okay, so that's kind of what the shared appreciation program looks like. We can kind of do a backtrack to that if you have more questions about that. Here's another graph that kind of shows you another look at how Dream for All, how the funding looks on that. So we can see another example. If I purchased at $500,000, this example we showed was at selling my home at year 5 at $640,000. You can see the relationship between what's in the Dream for All fund, how much equity I'm walking away with. As I continue to own that home over a span of 15 years, clearly my equity is going to increase. But at the same time, I do have that shared appreciation that I would repay that would also incrementally increase as well. So the longer I keep my home, the more equity ultimately I should be able to achieve. All right, let's talk a little bit about refinancing on a CalHFA Dream for All. So now that we're in kind of version 3, if you will, of CalHFA Dream for All, many of our clients that I've helped over the last couple of years with rates starting to change a bit, we're now starting to have the conversation around, should we think about refinancing our CalHFA Dream for All? And so the uniqueness of this program does allow you a one-time rate reduction on a refinance with Dream for All. However, it does have to be done with the refinance product offered with CalHFA. So CalHFA offers a CalHFA refinance Dream for All loan. And ultimately what it does is we're looking at your first mortgage and then your Dream for All loan, but we're not going to touch the Dream for All program. We're only refinancing the first mortgage. It does have some requirements to be able to refinance. One is we have to demonstrate 12 months of payments on that original mortgage for the first mortgage that you originally took out. You have to at least reduce your monthly payment by $50, which that should be easily achievable. And you have to at least reduce your interest rate by 0.5%. Now, my thought process in considering refinance is a little bit different. It's probably a little bit more conservative. Of course, we want you to have your 12 on-time payments, but I would also like you to reduce your interest rate by 1 full percent. Because ultimately, when you consider refinancing, there are costs in the trade-off of refinancing. Because refinancing, ultimately why we do that is because we want to reduce our interest rate, reduce our payment, but there is a cost in doing the refinance called closing costs. Refinancing closing costs can be anywhere between $3,000 to $4,000 depending on the construction of your loan. But from my perspective, if we can at least get a 1% reduction in rate, it really makes sense to refinance. Keep in mind too, with Dream for All, you only get one shot at refinancing. So the second time I refinance, if rates go a leg lower, only way I can participate in that is if I pay back the Dream for All. So we really got to get it right on the first refinance. And so ultimately, at least a 1% reduction in interest rates makes the most sense. Other thing I want to just kind of comment on here is you can't take out additional equity when you do a refinance with Dream for All. So it's only what we call as a rate and term refinance. So rate and term refinance means that you're only refinancing your existing payoff balance plus closing costs. No additional funds can be taken out of the equity of the home. All right, so I had another question that came in, and the question is, what are the interest rates on Dream for All? So that's a great question because interest rates on Dream for All are the same for every lender that participates in the program. However, the rate for Dream for All, if you're a voucher recipient, cannot be locked in until you have an accepted offer with a seller. So many of our clients that have vouchers active right now and have just gone under contract with a seller, now we're able to register them with CalHFA and strategically watch the market to be able to time that for the lowest interest rate option. Okay, but interest rates are set every day by CalHFA on every one of their products at 8 a.m. on each business day. And interest rates do change by the day. Now today, as we're qualifying clients for the lottery upcoming next year, we're going to use today's interest rates, but interest rates do change every business day. Okay, so that's a great question. Now, what do the steps look like to access the Dream for All and get registered? So once the program officially rolls out in early 2026, there's some steps that you have to take as a future recipient of this program or an interested party in the program. Number one is you do have to get pre-approved by a CalHFA approved lender. So not all lenders can offer this program. So we had the question earlier that came in, how do I get pre-approved or can I get pre-approved now? So the answer is yes. So I'm actively and our team is actively working on pre-approvals for clients that have eligibility for the program. There is a specific letter that CalHFA requires that only CalHFA approved lenders can complete. For our process within APM does require you to do an online application, which will provide you the links for that. There is a soft credit check. You do have to provide proof of income. And then we do two different options. You can do a full consultation with us where we do a virtual review session with you, or we have more of an express service if you just want to get your pre-approval and get prepared for the lottery opening. Now, there is an educational prerequisite to applying for the lottery. It is a 1-hour Dream for All education course that can be found on the CalHFA site today, so it is live. Just keep in mind that CalHFA training is only good for 12 months. So if I complete that training today on November 20th, that training is good only until November 20th of 2026. So if my participation in the program stretches beyond those 12 months, then I may have to retake the training class. So after you've done that training, then when the portal eventually opens, then you'll register with CalHFA. That registration has a process where you're providing identification. There is a questionnaire that you're completing to determine eligibility. And then once that has been received, then you'll go into kind of the lottery portal in anticipation of the drawing. Once the drawing happens, and we still don't have any clarification on dates for this, CalHFA will notify borrowers who are approved for the voucher, or if you're not approved for the voucher, you'll get waitlisted, or you're just not selected at all. So there's kind of three different outcomes, if you will, from the lottery. So we either get approved and selected on a voucher, we get waitlisted, or we get not selected for the program. And so you will get notified from CalHFA once the lottery has happened. Now, let's kind of fast forward a little bit. Let's do some positive thinking. Let's say we get selected for the voucher. Well, if that happens, then you're going to reconnect with us and advise us that you've been selected for the voucher. You will get a notification via email from CalHFA. You'll then send that to us. And then what we will do is meet with you for a pre-approval consultation to go through the refining of your application just to make sure everything's constructed properly, and then issue you a pre-approval that you can now start actively shopping in the market with. So that's a really important part. And I think it's important to understand that just because you're submitting to the lottery with one construction of your loan doesn't mean we can't change the construction of your financing if you get selected. So just an example, if you got pre-approved for the lottery for $500,000 and that's how you enter the lottery, but once you get selected, maybe you want to buy a home that's $525,000. We can still, as long as you qualify, reconfigure your financing, assuming you're still within your eligibility range. Now, if you get selected for a voucher, then you have 90 days to go under contract with a seller. So that means if I get selected for the voucher, I have 90 days to go under contract with a seller, not close escrow. And that's kind of a misconception that I've heard of quite a bit in the marketplace. You just have to go under contract with a seller within 90 days. Now, in addition to that, if you're unable to be under contract in that 90-day period of time, you will eventually get a one-time extension of 90 days for the voucher. So there was a rollout of vouchers that came out on August 20th to about 2,500 recipients all across the state. It was a next wave of voucher release. Those clients had to get under contract by November 20th, which is today. But if they didn't, then they get a one-time extension on their voucher for another 90 days. Okay, so we're kind of at the end of our session here, but I do want to open it up for more questions that the audience might have. And then depending on what questions we have from our audience, I also want to kind of give some scenarios and some learnings, if you will, on the CalHFA Dream for All program. We're going to have this obviously up on our YouTube channel for several weeks, but we are going to offer another session next month. So as we learn more about hopefully the future release in early 2026, we're going to be able to pass those along to our community so we can keep you informed on what's happening. As we're waiting for some questions to come in, I thought I would just share with you some of kind of the elements that I've learned, being a part of this for the last 3 years and helping on the creation team for Dream for All. It's been a really huge opportunity to be able to help serve our community with this program. The first iteration of Dream for All was a first come, first serve product. And that honestly didn't work very well for the community because not everybody had access right away or just for timing purposes couldn't access the program. And then in version 2, we switched to the lottery-based program. It did create some delays in the release of the program, but I think we learned a lot in terms of making sure we got access for those that truly needed the program. We also put some restrictions in place, which there's a cap of contribution. So in addition to the voucher, the maximum we can contribute as a buyer is 5% of our purchase price. So that really ensures that families that really need access to a program like this can really tap into it. So that is, some of the changes that we made in the program in version 2. And then year 3 or version 3, I think we've really kind of, got it figured out here. And I think we have a really good product to be able to serve our communities with. Now it's just making sure we get the rollout right for everyone that is interested in the product. Another question that came in was, is it hard to get offers accepted with this program? Do sellers not like it? It's actually quite easy to get offers accepted. I think it's important to be able to communicate the mechanics of the program to a prospective seller or a listing agent, or frankly for your own realtor that's representing you in the marketplace. As the leading provider of this program, I've been through probably every type of transaction with Dream for All, but it is really a conventional loan that will look and feel just like a normal conventional loan for the recipient of the program and for your sellers and listing agents and agents in general that are involved in the program. And then that Dream for All is just coming in to substitute or supplement, I should say, what's needed for the down payment. So there's no extra inspections that are done. There's no other additional waiting period. The timelines of the transaction for our team can be as short as 14 days to close escrows. From accepted offer to actually closing escrow, it can be short as 14 days. So there's a lot of misconceptions out there just because of what someone has heard about Dream for All. But I do think if you're working with an expert like I believe we are, it's a very seamless process that we can deliver on time every time for a client utilizing this voucher. I was asked to kind of elaborate a little bit more about what's the 90-day contract period mean. So when a voucher is issued, you have 90 days to go under contract or agreement with the seller. So for example, if I was issued a voucher on August 20th and I did not extend my voucher at this point, I would have to be under contract with a seller, because when you're under contract with a seller, then as your representing lender for CalHFA, then I can register you with the program to kind of stop the clock on really the countdown for the voucher. So you do again have a one-time option to extend an additional 90 days, but the initial onset is 90 days to go under contract with the seller. And then another question was, do you or can you use the Dream for All voucher for new home construction? So you absolutely can. Same principle, you have to go under contract within 90 days. The thing that's a little bit tricky, if you will, with new builds is we got to look at the build out time, because generally we only have a certain amount of time that we can hold on to that reservation. Usually it's like 4 to 6 months. So if you're looking at like a 12 to 16 month build time, that might be a little bit challenging with Dream for All. Again, I'm just going to kind of keep going around here. So we have, was there any specific financial characteristics that individuals who were selected in the past? Were their debt to income ratio low? Was the pre-approval amounts high? So it's a one size fits all with Dream for All. So there is no difference for selection, whether you're a 760 credit score or a 680 credit score or a 50% debt to income ratio or 35%. It is absolutely random selection. And it is not first come, first serve. And so everybody has the same access during the window opening of the portal to access the lottery. And then it is simply just random selection. And I think that was your question, but if it's not, just go ahead and just elaborate a little bit more and I'll kind of, I'll tag on with a response there. When the program starts, how long will we know if we got selected? So we don't know the timelines in the voucher selection. It was a little bit delayed in 24's rollout just because we were still learning and they were doing background checks for those that got selected. So it took a little bit longer. I do think the process is going to be more streamlined at this point. I don't think it'll be as delayed as we saw in 24 because I think we really got the systems in place behind the scenes. And I think there were some good learnings that came out of that from the last rollout for the lottery. So I think it'll be a lot seamless. I don't know a date because it'll all be kind of based upon when they open the portal. As I get more information, I'll be sharing that back out with our community, but it's still kind of a TBD type of situation at this point. And then how many families got selected for the last wave? We don't know the number of families that got selected at this point. I don't know if CalHFA has released all that data yet, but I know there is kind of just a post review of the program from wave 2. You know, the most recent voucher release that we had, because we had an additional set of funds that were released August 20th of this year. In that release, I know we had 2,500 families that were selected in that release, but there was a much bigger amount of families that was selected in 24. So this was just a spillover of funds that were available. Because what happened in 24 is, you know, there was a little bit of a delay in the selection process. So many families that really needed to buy a home right away just maybe lost interest and went a different direction with their financing, or got selected and maybe they didn't qualify at that time, or chose not to use the voucher at all. So then what happens is if people get selected for the voucher and they choose not to use it, then that voucher gets put back into the pool of available vouchers. And so, you know, throughout the process of version 2, we did see clients that were on the wait list move off the wait list and then ultimately get selected with the voucher. So, you know, I think it's important to understand that once the lottery does get, the selection process does get completed, if you get waitlisted, I mean, that wait list can change really fast. And what we've learned is that, you know, I might be voucher waitlisted 1,500, but depending on how the funding looks and how maybe someone that doesn't choose to use the voucher, you might come off that wait list pretty quick. So, you know, not all hope is lost if you get waitlisted after the lottery closes. Okay. And again, that data on how many families were involved in the program, I'm sure we can get that from CalHFA, and that'll be readily available for everyone. Other thing I just want to kind of comment on, I get a lot of questions about your initiation into the voucher. So what I would say, when you apply to the lottery, definitely make sure anyone that's involved that is a first generation. So if I'm applying with my partner and we're both first generational buyers, definitely make sure you have the designation of both being first generational buyers, because if you have to reconfigure your financing after selection, remember, at least one person has to be a first generational buyer. So really important that, you know, you can still fulfill the requirements of the voucher if maybe both parties aren't able to complete the transaction. And, you know, other things that we've learned is that, you know, in some cases, you know, we've had situations where a married couple has been selected for the voucher, right? And then maybe they had a separation and maybe a divorce situation, but one person still wants to continue with the voucher and still utilize the program, because they've been selected. You can still utilize that as long as you meet that first generational requirement, and you can still continue on to use that to help with your home purchase. So I guess my point here for the audience is that, things can change after selection, as long as we still can maintain meeting the underwriting guidelines for the voucher program. And then I want to just kind of touch on another aspect of the program. We didn't probably highlight it enough in the underwriting section, but the way the voucher works, again, you get up to 20% of your sales price in assistance or $150,000, whichever is less, right? The program allows you to put a maximum of 5% towards the down payment. Okay, so in that example that you saw earlier, $500,000 of purchase price, you can add up to an additional $25,000 in down payment. But you can still contribute out-of-pocket closing costs, prepaid items, in addition to that 5%. And you can do a thing called buy down of interest rate. Not something I recommend highly for clients in today's market where interest rates are going lower. But what that means is you can essentially pay additional funds out of pocket in order to bring down your interest rate, called points. That is separate from that 5% down payment contribution. So those are ways that you can structure your financing if you're selected for the voucher as well too. Another question that I get often is, can I utilize the Dream for All program with other assistance programs that are out there? And you cannot. So Dream for All is a standalone program, so it only works with a CalHFA conventional loan, and then we add in the Dream for All program. So, when you're applying for this lottery, and let's say you have a banking relationship that wants to do your first mortgage, if you get selected, you can't use your first mortgage with your bank and then use the Dream for All voucher. It has to be they have to work together. So the first mortgage has to go under a CalHFA conventional Dream for All loan, and then you also have the Dream for All voucher product that goes along with that. The other question I get often, especially for some of our clients that are looking to buy in low-income housing communities, we call those below market or BMR residential communities. So that's where you generally have to meet a certain income requirement to purchase in that community. Those types of communities generally have what we call as deed restrictions, which essentially restricts what you can do with the home, whether that's, who lives in the home, who you can resell to, who you can or how you can refinance. So those deed restrictions that exist in BMR homes or BMR communities don't match up with what the Dream for All restrictions look like. So I guess, for our audience here, if you do get selected, we're not going to be able to participate in any of those types of communities because they don't match up to what Dream for All's requirements need to be. So now with Dream for All, you can purchase a single family residence, townhouse, condo, even a manufactured home, but it does have to be a manufactured home that's on a permanent foundation, and it has to be essentially real property. So it cannot be like in a manufactured or mobile home park. Let me just make sure I'm not missing anybody here. What other questions do we have from our community here that I can help out with? I want to make sure I'm not missing anybody here. Okay, any questions at all I see coming in? Okay. So, as we're learning more about the rollout dates of the program, we're going to be providing updates on our socials. We are going to do another class like this next month as well. Again, this is going to be up on our YouTube channel, so you can kind of refer back to it. But this program is an amazing opportunity to be able to support affordable homeownership all across California. And, again, as being the #1 provider of this program, we're super passionate about serving with this program. I would encourage you, if you have time, hop on our socials to see the experiences of the clients that we've served with this program and some of the Reddit communities that talk about how we've supported them with the Dream for All program. We're really proud of what we're doing. This is a big financial decision, obviously, that you're making, and we want to make sure that you have a team of experts like ourselves to be able to help support you on this journey. And then we hopefully, the classes like this will help educate you and keep you informed as we move closer to the third launch of the Dream for All lottery. I'm going to stick around. I got some more questions coming in, so I just want to make sure I touch on all these. And it's another question on new builds. For the new builds, if you use the Dream for All loan, will you still, and this is a good question, will you still be able to participate in the new builds incentives? So highly unlikely that you can get the same incentives from builders. There's a reason why builders are giving incentives, because they're trying to move inventory. But at the same time, they want you to use their in-house lenders to be able to access those incentives. So, unless you're able to negotiate with the builder to use an outside lender that's a CalHFA approved lender like us, it might be challenging to participate in those types of incentives. One other thing I want to just touch on is, this is a conventional loan product. I mentioned it earlier, but I just want to make sure that you guys understand kind of the qualifying of this. This is a conventional loan, but it only follows the Fannie Mae guidelines. So when we think about conventional loans, there's a Fannie Mae loan, there's Freddie Mac loans. Freddie Mac has a different set of underwriting guidelines and how we interpret those versus Fannie Mae. And so with Fannie Mae, that's the only kind of product line that we can use for Dream for All. So when we think about differences in guidelines, for example, student loans, which can be a big thing that we have to look at for qualifying. Fannie Mae, if you're not in repayment on a student loan right now, we use 1% of the balances for qualifying, whereas a Freddie Mac loan uses 0.5%. So those are like little differences that we have between the products, between Freddie Mac and Fannie Mae, even though they're both conventional loans. But as it relates to Dream for All, it is strictly just a Fannie Mae loan. And we're going to kind of fast forward a little bit as we kind of get towards the end of our session, but I certainly will stick around a little bit longer for us if we need to. One of the differences in choosing a CalHFA lender is the cost structure of the financing they provide. So not all CalHFA lenders have the same cost structure with their loans. The interest rates are all the same for every participating CalHFA lender, of course, depending on the market. But the origination fees that a lender charges will look a little bit different. As being a proud partner of the CalHFA product, we try to scale our cost to make it the lowest provider in marketplace. But not all lenders work that way. So as you're considering, your lender of choice for this program, that is one of the things to keep in mind, because if you do get selected for the voucher, you do have choices with CalHFA lenders, and their cost structures that they provide can look a little bit different lender to lender. All right. Any other questions from our audience? I'm trying to make sure that I monitor any questions that come in. Hopefully you find this informative for you. We're kind of an early adopter right now, because obviously the program's not going to launch till early 26 for the lottery, but I think it's really important to keep you up to speed on what's happening with the program, and again, what we've learned in helping over 150 families with the voucher. It can be a very seamless process if you get the voucher, and we certainly want to be here to help support you in that. Before I sign us off here, any other questions from our community that I can help answer? All right, well, I've provided all my contact information here, so feel free to reach out to me. If you want to learn about getting started with your pre-approval process, you can go right to our book your appointment link here. We have 2 lanes that you can go down. We can go the Express Dream for All pre-approval route, or we can do a full consultation for you, whatever you would prefer to do. But ultimately, if you do want to get prepared for the lottery, you would complete an online application. We do have a soft credit check that we would do, and then you would upload documents, and then we would help educate you on your qualifying for the program, hopefully issue you your pre-approval for the voucher, and then have you all ready to go for when we eventually get the announcement of the lottery opening. All right. Well, thanks again for joining me for this evening. We'll have another class available for you next month. So if you have friends, family, or coworkers that think would enjoy kind of learning a little bit more about the Dream for All program, feel free to check us out next month, and we'll look forward to seeing you soon. Have a good night.